the management of JB Pharmaceuticals. We have Nikhil Chopra, our CEO and whole-time director, joining us. Nikhil, good chatting. I'm Harsh. Let me first start off by asking you, the growth clip over the last 3 to 4 years has been extremely solid. I won't just talk about FY25 or Q4 in particular, but the last 3 to 4 years. How sustainable is this kind of 25% growth clip number, at least on the top line? And where will it come from? Because some of your businesses, for example, CDMO, which are higher margin, can have the ability to grow faster and their share in the mix, there is scope to expand that.
So Harsh, good to be on NDTV Profit. And I think very good question that you're asking. You're asking about the entire journey that we have traveled for last now 4 years. And how does the medium-term outlook look? So the way we are poised as a company, India business contributes now close to around 60% of the revenue. And India, we have been growing at a CAGR of around 12 to 14% x the deals that we have done. Market growth in India is around 7%. So we handsomely beat the market growth, which will be sustained. I was hearing just before you were talking to one of the guests, you and Neeraj were talking that results are okay, but if you are able to sustain that growth and makes better profit and able to invest right back in the business, that is what the model we are seeing in the coming time for JB. So our profits always will be growing better than the top line. We should be able to grow close to 12% in the coming time overall, short to medium term. Top line 12%, and profits we want to grow around 15%. That is how the outlook is, and this will more be coming from India. India will be growing at around 12 to 14%, backed up by solid volume growth. Our volume growth is around 6% as compared to market volume growth of 2%. And the portfolio that today we are positioned in India, 70% of that portfolio is progressive. That gives us a lot of confidence in terms of how we can harness this portfolio more in the chronic space, more in the lifestyle diseases, be it cardiology, heart failure, lipids, hypertension. Equally, I think the company has done fantastically well over the last 2-3 years in the area of probiotics, pediatrics, and this will be able to sustain for short to medium term in the coming time. Also, what you are asking about the world of CDMO. CDMO has been a fantastic run for us. CDMO in 2020, when we came in, was contributing 5% to the revenue, which was $10 million. Today, CDMO is contributing 12% to the revenue, which is $50 million. And this $50 million, the vision that we have kept in next 4 years, we want to take this $50 million business to $100 million. Our average run rate per quarter this year has been 110 crores. And this business happens in the world of Lozenges, and entirely this business happens across the globe outside India with some of the big multinational players, more the consumer space, more in the area of cough and cold. That is how we are positioned. Now, fortunately for us, last couple of years, we have been working on some big 4 or 5 marquee projects, be in the area of ORS, be in the area of lozenges now going to Europe and US. Already we export our lozenges to South Africa, Russia, Southeast Asia, Middle East, South Africa, but now we are getting into Europe and US market with lozenges. We are getting into a new formulation for cough and cold throat spray. We are getting into some tie with for the injectable business for a company in South Africa. So a lot of progress that we will be seeing in this business in the coming time. So right now the run rate is 110 crore for FY25 every quarter, which is around 440 crore business. FY27 April onwards, we see this run rate from 110 going to 150. A CAGR growth of 15%, that is what we see in this business, and more it will be margin accretive. So overall, 12 to 14% growth, India 12 to 14% growth, CDMO, company 12% growth. We have been also fortunate to raise our guidance in 3 years, every year. If you look at the EBITDA margins that we delivered were 26.3%, that is 1032 crore. The guidance was 25 to 27%. Now, yesterday in our investor call, we have revised our guidance from 27 to 29%. In that range, we'll be able to deliver EBITDA margins. This all will happen with better product mix, driving the efficiency, and more of the EBITDA margins will be coming from the top line.
Point taken, sir. So, I'll push you a bit with regard to margins, but I just want small correction. The last 4-year revenue CAGR is 17%, so not 25. 25 is the domestic formulation business top line growth over the last 4 years. So just small correction there. But I want to sort of talk about margins for a couple of minutes. What is it that is driving margins consistently higher? Because that's where a bulk of your profitability push is coming from. And what makes you confident of this, of hiking this margin guidance to 29%, and any downside risk to that?
So if you see the 4-year journey, India was contributing 45% to the revenue and CDMO was contributing 5%. So total was 50% in 2020. In 2025, if we fast forward, today India is contributing close to 57, 58%, and CDMO is contributing 12%. So that contribution going up of India and CDMO is the gradual jump that we have been seeing in the margins, and this close to 70% today, what contribution comes from India and CDMO, we want to take it to 80%. That is what is a trajectory which will help us to improve. That gives us a lot of confidence. And within India, if you look at today, 55% of business is coming from chronic space, where there is a lot of refill, a lot of adherence, and some of the therapeutic areas that I have been talking within India chronic space, we are leaders in the category, like hypertension. We have a big franchisee called Silacar Tea. Equally, we have done fantastically well. Our 6th brand now entering in the top 300 in IMS is Sporolac, the probiotic brand which we acquired. So a lot of ingredients are there which will help us in terms of growth aspirations that we have put in place for India, 12 to 14%, which in turn will be margin accretive because a lot of contribution will be coming from chronic and semi-chronic therapies. Downside is we are trying to do something in a small way in rest of the world branded generic business. That business is a $50 million business. Unfortunately, that business has been growing at high single digit. But what we have done is in last 3 years, we every year have been filing 10 products every year in the form of dossiers for this markets, that is Sub-Saharan Africa, Latin America, Southeast Asia, and Middle East. These products will start commercializing in FY27. Up till now, the business that we do in rest of the world, branded generic world, is $50 million. 50% of that business is tender. In tender, there are risks that you will lose the tender because of there are companies which are competitive and they just supply the goods at cost of material. So there you see some pressure points which we have been facing in some of the markets, historically in South Africa and rest of the world market. Otherwise, the focus continues to remain in India. Focus continues to be the world of CDMO, and the products that we are trying to file and get registered in rest of the world market are all progressive in nature. So we'll be able to demand better pricing and it will be all prescriptive in nature.
Nikhil, good afternoon, Neeraj here. Quick follow-up to that, and then a question on CDMO. But these products that you said that you're filing which commercialize in FY27, does it give a flip to your revenue run rate growth FY27 onwards? I mean, as Harsh said, was probably around 17% CAGR for the last 5. Do you reckon that you could actually eclipse those numbers FY27 onwards with the commercialization of these molecules?
This, Neeraj, just to correct you, that 17% CAGR growth is backed up by the 5 deals, acquisitions that we have done in India.
Fair.
That is how you see the 17% CAGR growth.
Be that as it may, organic plus inorganic, not a problem.
Organic. So what will happen with this work that we are trying to do in the rest of the world market, the business growth is 8-9% if you look at. But this will propel up the growth to around 12 to 14%, which will happen. But more benefit will come in terms of the margins, because this product will be at a price point where we'll be able to take price increases, we'll be able to generate better demand, and we'll be able to command better pricing, which today we are not able to do in our current portfolio because it is more commoditized portfolio. So you will see in the coming time with what we are trying to do in India, CDMO in some parts of BGX, I think mid-teens growth will be more than happy if that is what we're able to demonstrate. But net, the way we look at our profits have to grow better than the top line.
Which they will. So that's why you reach 29%. Okay, I understand. But if you do 14% organic and nothing stops you from continuing in the inorganic moves, right? I'm presuming with size you'll probably have better opportunities. So are you saying that from 17% CAGR you will go down to 14, or do you believe 14 organic plus inorganic means that you might actually be able to eclipse 17%?
Right now, short to medium term guidance is 12% growth. Let us look at from that
organic
perspective.
And inorganic
short to medium term is
12.
No, only organic, as is on the existing portfolio of 4,000 crore.
Okay.
If we buy anything in India, it will be top up. And FY27 onwards, once we start registering our product, our market projects come into place, you will start seeing
14%.
See, if we don't do anything, Neeraj, if we continue business as is, I see sometime mid of FY27, my growth should come in mid-teens. But if we buy and do some inorganic acquisitions, then the growth
will be higher.
Propel up to what figures you are revealing. Yeah.
Okay, and this 29% also will be from FY27 when you enjoy the benefits of these commercialization molecules. Okay, just one quick.
No, FY27 is the immediate guidance to 27 to 29%.
And then it improves, you are saying.
Yeah, then we'll see if God will be kind for us, we'll improve. So guidance for the current year onwards, the guidance is 27 to 29%.
Got it.
Okay. We've been fortunate enough that we are always on the higher side of the guidance that we have been committing.
Okay, Nikhil, just one final question from my end. CDMO seems to be the buzzword, save for one or two firms. Almost everybody in this pharma space who's got the CDMO angle to themselves have delivered very solid numbers and spoken very constructively of the quarters ahead. I've heard you speak about higher proportion of CDMO as well. Could you give some color there very quickly? We are out of time, but just one last question from my end, please.
So Neeraj, our CDMO is a bit different as compared to the way understanding of CDMO is the way CDMO is spoken.
Okay.
Just for you to give a flavor, 70% of our CDMO comes in the form of lozenges, cough and cold across. I can't take the name of brands, but we do big manufacture of big brands across some of the big market consumer players. So 70% happens in the world of lozenges. That is how, and this goes to South Africa, Russia, this goes to Southeast Asia, Middle East, Sub-Saharan Africa, Australia, New Zealand, Canada, and now we have got the entry in Europe market, and now in a small way we will be getting into the world of US market also. And this lozenge, and we are the 5th largest globally in terms of capacity that we have for lozenges. We have the capacity to manufacture 2 billion lozenges annually. Last 3 years, we've been manufacturing 1 billion lozenges every year. So that our CDMO is a bit different. But now, what we are trying to do is to get into different formulations within the CDMO space, more in the consumer world. Throat spray, stick pack, unit liquid dose. So we only manufacture branded products in the world of CDMO. We don't do a P2P work in the world of CDMO. So our CDMO touchwood has been margin accretive. It requires a lot of developmental work, and our plants are all regulatory approved. That is how we are positioned in the world of CDMO, and we are very much optimistic. What I was telling you, that there are some iodine-based products where the projects where some commercialization will happen in a big way for some of our products in the world of CDMO. Equally, we are looking to have a big ORS-based project with one of the big global consumer company, which will start commercializing in mid of FY26. And we are trying to do something in the world of lozenges, which I told for Europe and US market. So these are 3-4 things. And equally last, we also have developed a formulation in the form of throat spray, which we are very much optimistic that this in different drugs will be able to deliver to our partners. So that is what we are trying to do in the world of CDMO, not like traditional work with many of the companies do.
Thank you so much, Mr. Chopra, for joining us this afternoon. Both Neeraj and me itching with regard to more questions on your business, but we'll have to let you go on that note.
Thank you, Neeraj. Thank you, Harsh, for having me on your channel, and we'll be more than happy to connect with you in the coming times.
Perfect. Thank you so much, sir. Very kind of you.